This is another podcast from Alpha Business Media. Welcome to the Deep Dive. Today, we're plunging into a topic that's really critical for a country facing the stark realities of climate change head-on. Green finance in Nepal.
Absolutely. It's a big one.
And we're doing this deep dive based on a really comprehensive assessment. Looks like a report that specifically digs into Nepal's banking sector.
Yeah, it asks some tough questions, about how ready they actually are to fund green projects.
And whether the incentives, the things meant to encourage this, are actually working.
Exactly. Nepal's intense vulnerability to climate change isn't theoretical. It's an urgent reality that demands sustainable investment, like right now.
So our mission today is pretty straightforward. We're going to unpack what this report tells us.
Looking at the building blocks being put in place.
The significant challenges still standing in the way.
And crucially, what absolutely needs to happen to, unlock that green investment potential in Nepal.
Think of it as us sorting through these crucial insights together, figuring out what you really need to know.
Sounds good.
All right, let's get into it. The report kicks off by underscoring just how vulnerable Nepal is. The climate crisis.
It really does. The rankings are stark.
Yeah, it ranks incredibly high globally, 10th for past climate disaster exposure and 44th for future risk on the Global Climate Risk Index.
That's a clear signal, isn't it, of the pressure the country's under?
It really highlights why green finance isn't just some abstract concept here. What are the specific risks they detail?
Well, they talk about an increase in, frequency and intensity of things like floods, landslides, droughts, even heat waves.
Yeah, the impact.
It's already devastating, particularly on agriculture, which employs a huge chunk of the population. 64%?
Wow.
And it's heavily reliant on those monsoon rains. Plus, critical sectors like water resources, hydropower, and tourism are also severely threatened.
So it's hitting everything.
Pretty much. And on top of that, you've got rapid kind of unplanned urbanization making things worse. And health risks, too. Things like malaria and dengue fever are projected to rise.
Wow, so this isn't just about, environmental idealism. This is hitting core parts of the economy and people's actual lives.
Absolutely. And that's why the report really emphasizes that in this context, green finance isn't just about environmental protection.
Right.
It's fundamental for national security, for economic stability, sustainable development. It's basically a necessity.
Especially for those adaptation projects, right? Resilience projects.
Exactly. The ones that directly benefit vulnerable communities and protect those critical sectors we just mentioned. That's why it matters to you. It's about the country's foundational stability and its future ability to, thrive in a climate-stressed world.
Okay, so given that urgent need, what kind of green projects are we actually talking about? What could attract this finance in Nepal, according to the report?
Yeah, the report points to several key sectors with significant potential. Renewable energy is predictably high on the list.
Hydropower, I assume.
Hydropower is huge, yeah. Estimated around 42,000 megawatts that are economically viable. But interestingly, they also highlight the rapid growth and vast technical potential of solar energy.
Oh, really? Solar?
Yeah, staggering potential, actually estimated at 432 gigawatts. And the Nepal Electricity Authority, the NEA, they're already targeting 800 megawatts in power purchase agreements.
So diversification is key, then.
The report definitely stresses the need to diversify beyond just those large hydro projects.
Smart. Makes sense for energy security, resilience, too. What else is on the list?
Sustainable tourism is a key one. So thinking about eco-hotels, community-based tourism, preserving heritage, all while minimizing the environmental footprint.
Okay.
Then there's green construction and energy-efficient housing. The report notes some banks are actually starting to offer specific products for this.
Like for using eco-friendly materials.
Exactly, or energy-saving tech like solar rooftops, rainwater harvesting systems, things like that.
And beyond those, any other sectors mentioned?
Yep. They also mention opportunities in waste management and recycling, sustainable agriculture focusing on climate-resilient organic farming,
Right.
and electric mobility. So
For sure.
EVs, the charging infrastructure they need, the picture they paint is quite diverse. It's not just about, multi-billion-dollar energy projects.
Okay, so the need is massive. The project types are varied. What about the framework? What policy and regulatory building blocks are actually in place to support this?
This is where things start to get interesting in terms of the foundations. A really significant recent development is the adoption of the Nepal Green Finance Taxonomy.
A taxonomy, like a classification system.
Exactly. It landed in October 2024. Think of it as a standardized list defining what actually counts as green.
Okay. Who developed it?
It was a collaboration. The central bank, that's the Nepal Rashtra Bank, or NRB, worked with government ministries like finance and environment, plus regulators like SEBIN, the Securities Board, and the Insurance Authority.
So, a common language for green. That sounds pretty crucial. What's the NRB's role with this now?
Well, the NRB is taking a clear lead. They've issued a directive requiring banks and financial institutions, BFIs, to start integrating climate change considerations into their investment decisions.
And using the taxonomy.
And, crucially, yes, using this new taxonomy as their guide. This links up with Nepal's broader national strategies, like its NDCs.
Those are the climate action plans under the Paris Agreement, right?
Exactly. Prioritizing adaptation, seeking billions for mitigation. It also aligns with the country's goal of carbon neutrality by 2045 under its GRID approach, green, resilient, and inclusive development. So there's definitely a policy push happening.
Okay, so we've got a classification system, a central bank mandate, linking it to national goals.
Yeah.
Are the banks, the BFIs, actually doing green finance on the ground yet? Can we see specific financial products?
Yes, there are initiatives starting, though the report is quite clear about the scale. It's still early days.
Like what?
Well, Nepal saw its first green bond issued by an NMB bank. It was for $60 million. And it wasn't just a domestic effort. It had international backing from the IFC and British International Investment, BII.
And what was it for?
Specifically targeted financing green SMEs, small and medium-sized enterprises in areas like EVs and solar.
Interesting. Any others?
Yeah, the Nepal Infrastructure Bank, NIFAR, has also got approval for a green energy bond, about 5 billion Nepalese rupees, or NPR, for renewables.
Green bonds are a positive sign. What about direct lending products from the banks themselves? Are they offering specific green loans?
The report highlights that some banks were developing specialized credit products. Nebil Bank, for instance, has an eco-friendly business loan, apparently with a slightly lower interest rate,
Okay.
and a sustainable savings account. NMB Bank offers specific financing for renewable energy and EV loans, alongside a green savings product.
And Global IME.
Yeah, Global IME Bank has a global green mortgage special rate for eco-friendly homes and a green driving scheme. Apparently, over 70% of their auto loans are now for EVs.
Wow, 70%. So you can see concrete examples emerging, things you could potentially ask for at a bank.
Absolutely. And the report notes the vital role international development partners are playing here.
Like who?
Organizations like the IFC, BII, the Swiss SDC, Asian Development Bank, ADB, the Green Climate Fund, GCF, KOICA, GGGI, they're providing crucial investment and technical assistance.
Okay, so foundations are being laid, initial instruments and products are appearing. But I guess the big question is this enough? Enough to meet the challenge?
That's where the report is quite blunt, actually.
Yeah.
It states clearly that the current scale of these green finance initiatives is, well, insufficient. Nepal has massive green investment needs linked to its climate goals.
How massive?
Estimates point towards around $77 billion needed by 2030, and $28.4 billion just for those NDC mitigation targets we mentioned earlier.
Okay, so the current efforts.
The initiatives we're seeing now, while important first steps, are acknowledged in the report as just a drop in the ocean compared to that immense need.
Right. Okay, that brings us to the core assessment then. The real readiness of the banking sector in the country. What are the actual practical challenges holding things back for the banks and green finance more broadly?
This is where the systemic issues really become apparent. First, let's look at lending practices.
Okay.
While there are central bank targets for priority sector lending like 10% for energy, 15% for MSMEs by 2027.
Which sounds good on paper.
It does, but the report points out a significant bias within that energy target. It's heavily skewed towards hydropower.
How much?
Nearly 47% of electricity generation from independent producers comes from hydro, compared to just 1.5% from solar.
Wow, tiny for solar.
Yeah. So the concern is that a general energy target isn't really pushing enough diversification into non-hydro renewables. You might need specific sub-targets for that.
And lending overall.
Plus, overall lending growth has slowed down since the pandemic anyway, so that's one layer.
Okay, so targets are there, but maybe not specific enough for green diversification.
Yeah.
What about the bank's own capabilities, their expertise?
That's the second major challenge identified, bank capacity. The report highlights a real limitation in the technical expertise needed to properly assess and manage green projects.
Oh, so.
While traditional banking in Nepal often relies heavily on collateral, on guarantees.
Physical assets.
Exactly, rather than really analyzing a project's future cash flow potential, which is essential for many newer green technologies or smaller projects, like small hydro plants.
So they don't understand the tech.
Often, banks lack a deep understanding of the specific risks and potential returns of different green technologies. That makes them hesitant.
And businesses feel that.
Yeah, green entrepreneurs confirm this. They say banks don't really get their business models, which makes getting finance tough. International partners are helping with capacity building, but it's a big hurdle.
If banks don't truly understand the technology or the business model, they'll naturally just fall back on asking for lots of physical assets as security, right?
Exactly. Which leads directly to the next set of identified issues the report zeroes in on. High and sometimes variable interest rates. And those significant collateral requirements we just mentioned. These are huge problems, especially for SMEs and green startups who might not have substantial fiscal assets.
Because banks see them as risky.
Banks often perceive SMEs as high risk, yeah. One data point from a report shows the non-performing loan rate, the NPL rate, for smaller SME loans under 10 million NPR is around 4.3%. That can be seen as high.
Okay.
There are also information gaps. Banks lack reliable data on the viability of specific green projects or market trends. And generally, let's be honest, banks often prefer dealing with larger borrowers, seen as less complex, lower risk.
So the traditional banking model, built for like brick-and-mortar businesses with lots of property, isn't really suited for potentially asset-light green ventures, like software or services.
Precisely. A startup developing smart grid software or maybe a community-based ecotourism model might not have land or factories to put up as collateral in the way a traditional manufacturer would.
Has the central bank tried to address this?
The NRB has introduced some measures, like interest rate caps and adjusted risk weighting for SME loans, but the report suggests these steps probably need to be strengthened to truly tackle these barriers, especially for green SMEs.
Okay, what about the role of technology here? Can fintech, financial technology, help bypass some of these traditional hurdles?
The report definitely explores this as a potential piece of the puzzle. Fintech platforms are emerging in Nepal.
Like what kind?
You have platforms like Phone Alone offering digital, sometimes collateral-free loans via mobile apps, or services like InvoiceD doing invoice discounting for businesses.
And payments.
And digital payment systems like Isawa and Kalti are widespread. The NRB is actually supporting this with a Digital Finance Innovation Center and even looking at a regulatory sandbox for innovation.
That sounds promising, maybe for smaller scale green things like household solar or efficiency upgrades.
It definitely has potential, yeah. These digital platforms could help channel micro-green finance more efficiently, perhaps bypassing some traditional bank requirements like heavy collateral, especially for smaller loans.
Instant loans, maybe?
Phone Alone's instant loan feature, for example, could be useful for quick green upgrades. However, the report is realistic.
What are the catches?
It notes challenges like, underdeveloped digital infrastructure across the whole country and still relatively low levels of financial literacy among the population. So it's a promising avenue, but it's not a complete solution on its own yet.
Okay, makes sense. Let's shift focus then to the economic incentives. The report specifically looked at whether these are effective in driving green finance. What did it find?
Yeah, this section of the report is actually quite critical. It highlights some significant problems. Let's start with the subsidized lending programs.
Okay, what are those?
The NRB has had schemes since about 2018-19 offering subsidized, so lower interest rates for loans in productive sectors. That includes areas like SMEs and energy, which could potentially be green.
Right. So did these programs work? Did they boost lending?
Initially, there was some growth, but they face a major systemic issue that has, frankly, severely undermined their effectiveness.
What's the issue?
The government hasn't actually paid the promised subsidy amounts to the banks. According to the report, the government currently owes the banks around 15 billion NPR for these subsidies.
Wait, seriously? The government promised to cover part of the interest, didn't pay the banks, and now the programs are just stalled?
That's precisely what the report implies happening. This fiscal indiscipline has led many banks to simply stop issuing new subsidized loans. Why would they if they aren't getting reimbursed?
You can see why. Is there data on the decline?
The data backs this up clearly. The number of beneficiaries and the loan volumes under these schemes have dropped sharply, from 147,000 beneficiaries getting 213 billion NPR a couple of years back,
Yeah.
down to 103,000 beneficiaries and only 91 billion NPR in the current fiscal year.
Wow, that's a huge drop.
It is. The report also points to other issues like loan concentration banks favoring larger, less risky borrowers, even within the scheme, potential misuse of funds, and a growing culture of default. It clearly states the effectiveness is seriously undermined.
That's a massive problem. An incentive designed to help is actually failing because the government isn't paying its bills.
Hmm.
What about tax incentives? Are they any better?
The picture here is pretty mixed and generally fragmented, not always directly tied to specific green outcomes.
Examples.
Well, the most recent budget did maintain existing tax rates on EVs to support adoption, which is good, and put a very low 1% duty on EV charger equipment that's a clear green incentive.
Okay.
There are also corporate tax cuts for sectors like IT, hotels, tourism, income tax exemptions for startups, rent reductions in special economic zones.
Those sound positive on the surface, right?
Mhm.
Encouraging business.
They are, but the report's critique is that they're often quite broad. They're not specifically conditional on green investment or practices.
So a hotel gets a tax break just for being a hotel, not for being a green hotel.
Pretty much. There's nothing in the incentive structure necessarily ensuring that hotel invests specifically in, say, energy efficiency or sustainable water use.
I see.
And compounding this, the same budget introduced things like luxury taxes and kept VAT on air tickets and domestic tourism. Industry bodies, like the Hotel Association of Nepal, HAN, argue this actually deters tourism, a sector with significant green potential.
So conflicting signals from policy.
Exactly. It creates confusion.
So incentives are there, but maybe not well targeted for green actions. And sometimes policy works and gets itself. Did the report look at international examples?
It did. It compares Nepal's approach, noting the heavy reliance on these potentially unreliable direct subsidies compared to, say, market-based mechanisms.
Like what?
Things like renewable energy targets or feed-in tariffs used elsewhere. Often the costs there are passed to consumers or retailers in a more predictable way. It also touches on the idea that supporting green projects in Nepal helps reduce fossil fuel use globally.
Okay, so what are the big gaps and opportunities then for making incentives work better, specifically for green finance?
A major gap identified is the lack of reliable risk mitigation mechanisms.
Reading.
Like robust loan guarantee schemes specifically designed for green SMEs, things that would make banks much more comfortable lending to these potentially riskier ventures.
Right, share the risk.
Exactly. The report also notes there's very little discussion around carbon pricing mechanisms in Nepal, which could be a powerful market-based incentive.
And crucially.
Crucially, it highlights that current incentives are not yet explicitly linked to the Green Finance Taxonomy we talked about earlier.
Connecting the incentives to the actual green classification system. That makes a lot of sense.
It does. So the opportunity lies in reforming those subsidized loans the government has to pay its dues, and then linking all incentives, tax breaks, subsidies directly to projects verified against the taxonomy.
And the risk sharing.
Introducing and scaling up those risk-sharing mechanisms, like dedicated green loan guarantee funds, is seen as critical. And exploring market-based tools, maybe feed-in tariffs or even pilot carbon pricing, are important future steps. Plus, transparency, making sure everyone knows how incentives work and what they achieve.
Okay, let's zoom out a bit from just banks and incentives. What are the big systemic barriers the report identifies? The larger issues holding back green finance in Nepal?
This gets to the core structural problems. First, and this is huge, the general SME financing gap.
We touched on this, but how big is it?
Nepal has a massive fundamental problem getting finance to its small and medium-sized enterprises. Estimates of the gap range anywhere from $1 billion up to $3.6 billion, depending on the source.
Wow.
Only a tiny fraction, like 16% of startups, manage to get bank loans, and 44% of all SMEs cite access to finance as their major barrier.
And why is this so critical?
Because SMEs are the absolute backbone of Nepal's economy. They contribute about 22% of GDP and provide something like 1.8 million jobs.
So this general failure to finance SMEs inevitably hits green entrepreneurs particularly hard, because many innovative green ventures probably start small.
Precisely. If the fundamental system for financing SMEs is broken, green SME finance will struggle even more, especially since their business models or technologies might be newer or perceived as riskier by traditional banks. Addressing the overall SME financing gap is basically a prerequisite for scaling up green SME finance.
Makes sense. What about the policy and regulatory environment itself, beyond specific incentives?
That's another major barrier identified: issues around policy coherence, regulatory clarity, and especially implementation.
Oh, so.
While the taxonomy is a positive step, the report points to inconsistent application of regulations. There's persistent bureaucracy and a lack of coordination between the different bodies involved: the central bank, various government ministries, the investment board.
Creates uncertainty.
Exactly. It creates uncertainty and complexity for investors, particularly foreign ones. They find the approval processes cumbersome and slow. The failure of that subsidized loan program because of implementation problems and government non-payment is a prime example of this systemic issue.
So policies might exist on paper, but making them work together smoothly on the ground is the real challenge. What else is on the systemic barrier list?
A very significant recent barrier, highlighted strongly in the report, is Nepal's inclusion on the Financial Action Task Force FATF gray list.
Right, that happened in February 2025. What does that mean exactly?
The FATF is the global body setting standards against money laundering and terrorist financing. Being put on the gray list signals that a country has deficiencies in its financial crime regulations and enforcement.
And the consequences.
The report details severe negative economic consequences: increased scrutiny and due diligence for all financial transactions, which means higher costs for businesses and individuals, damage to the country's international reputation. It discourages foreign investment and remittances, and critically, it makes it much harder to access global capital markets.
Okay, and how does that specifically impact green finance?
Oh.
That seems crucial.
It's a critical link. Being on the gray list directly restricts Nepal's ability to access vital international climate funds.
Like the Green Climate Fund.
Exactly. The GCF, the Global Environment Facility, the Adaptation Fund, and also other forms of foreign direct investment needed for larger green projects. These international funds often have strict conditions related to strong financial governance frameworks.
Which the gray listing signals are lacking.
Precisely. It effectively cuts off a potentially huge source of capital needed for Nepal's green transition. It's a major roadblock.
That sounds like something that needs incredibly urgent attention then. What's the final systemic barrier the report notes?
The last one is infrastructure and capacity shortcomings. And this isn't just about green infrastructure, but basic infrastructure too.
Like roads.
Yeah, for example, inadequate roads can impact the transport of components needed for renewable energy projects. There's also a lack of specific green infrastructure things like widespread EV charging stations or modern waste processing facilities.
And capacity.
And critically, there's a general lack of technical capacity, both within national institutions and within the banks themselves. Capacity to effectively design, manage, monitor, and evaluate complex green projects. Investment in green projects needs that foundation of both physical infrastructure and skilled human capital to actually succeed.
Okay, wow. So we've seen the urgent need, the potential projects, the initial but clearly insufficient building blocks, and then these significant challenges. From specific issues within banks and flawed incentives, right up to broader systemic problems like the SME gap, policy dysfunction, the FATF listing, and infrastructure and capacity deficits. It's a lot.
It is a complex picture.
So what strategic pathways does the report propose to move forward? How can Nepal chart a course to unlock this potential, given all these hurdles?
The report lays out several key recommendations, kind of grouped logically. First, it stresses the need to enhance the banking sector itself.
How?
Through targeted capacity building for the BFIs. Training them specifically in assessing green project viability, using that Green Finance Taxonomy for climate risk analysis, really understanding the different green technologies.
Build their expertise.
Exactly. And also encouraging banks to develop more innovative financial products. Things tailored to specific green needs, like small household solar loans, or finance for climate-resilient agriculture value chains. And pushing them towards cash flow-based lending models for SMEs, moving away from relying solely on collateral.
Give them better tools and change the mindset a bit. What about the incentives?
The recommendations are quite clear here. Implement more effective incentives. This starts with a direct call for the government to reform those subsidized loan programs by actually paying back the $15 billion NPR owed to the banks.
Restore trust, basically.
Yes, restore their willingness to lend under these schemes. Crucially, it recommends linking all incentives, tax breaks, subsidies, whatever, directly to projects that are verified as green using the Green Finance Taxonomy.
Tie it to the definition.
Precisely. And introducing and scaling up robust risk-sharing mechanisms, particularly those green loan guarantee funds, is seen as vital to de-risk lending, especially to SMEs.
And market mechanisms.
And exploring market-based incentives like feed-in tariffs or maybe pilot carbon pricing mechanisms is also recommended, plus transparency throughout the whole process.
Okay, make incentives work, make them green-specific, manage the risk for banks. What about the broader regulatory environment? Fixing that ecosystem.
They recommend strengthening the regulatory ecosystem. This involves ensuring consistent application of the Green Finance Taxonomy and the NRB guidelines across all the banks and financial institutions.
Consistency is key.
Absolutely. Improving coordination and streamlining processes between the different ministries and agencies involved in project approvals is essential. Cut the red tape, reduce uncertainty, especially for investors.
And green bonds.
Developing clear rules for the green bond market is also needed. And critically, the report strongly recommends urgently addressing the issues that led to that FATF gray listing.
To restore international confidence.
Exactly. And reopen access to global finance, which is critical.
Addressing the FATF issue really does seem like a top priority if they want to attract external capital. And finally, how does the report suggest actually attracting that international finance?
The recommendation is basically to attract international climate finance and partnerships much more proactively.
How?
This means actively engaging with international climate funds, GCF, Adaptation Fund, plus the multilateral development banks like the World Bank, ADB, and bilateral partners, engaging them for both finance and technical assistance.
Show them projects.
Nepal needs to develop a pipeline of bankable green projects that meet international investor criteria, and strengthen the capacity of its own national institutions to actually access, manage, and report on these international funds effectively.
Maybe blended finance.
Potentially using blended finance approaches, combining public and private capital is also mentioned.
So, build capacity to access the funds, present clear projects, and partner strategically.
That sums it up well.
This has been a really fascinating deep dive into a complex but absolutely vital area. It seems Nepal has taken some important first steps, establishing that green finance taxonomy, seeing some initial financial instruments emerge.
Sure, the foundations are there.
But the report really highlights that the sector's readiness, the country's readiness, is significantly limited by practical issues like banking sector capacity, by seriously flawed and ineffective incentives.
Especially the subsidy non-payment issue.
Right. And by major systemic barriers, that fundamental SME financing gap, the challenges with policy implementation, the really critical impact of the FATF gray listing, and those underlying infrastructure and capacity deficits.
Exactly. Overcoming these interwoven challenges isn't going to be simple. It requires a truly coordinated, determined effort across the board.
From everyone involved.
Right. The government needs to demonstrate fiscal discipline, link public support directly to verified green activities using that taxonomy. Regulators have to strengthen the framework, supervise effectively, build capacity in the BFIs.
And the banks.
The banks themselves need to invest in expertise, perhaps rethink their traditional risk assessment models, and definitely leverage digital solutions where possible. And of course, international partners are crucial for providing both necessary finance and technical assistance.
It really sounds like a journey that requires, long-term commitment, significant institutional reforms, and adaptive governance. Success seems dependent on embedding sustainability thinking into pretty much every aspect of planning and investment.
It absolutely does. It has to be integrated.
Well, thank you for joining us on this deep dive into green finance in Nepal.
And maybe as you, the listener, reflect on how interconnected all these challenges are, from government debt impacting local bank lending all the way to an international gray list affecting global capital. Perhaps consider this thought, drawing from the report's perspective. Which single barrier do you think is the most critical for Nepal to overcome first, to really unlock its green economic potential?
That's a powerful question to think about. We appreciate you exploring this important topic with us today. We'll be back soon with another deep dive into complex issues, helping you get informed quickly and effectively.
Until then.